Global Automakers CEO John Bozzella joins us on this auto warning coming out of the German car makers. Very worried that this is going to backfire on them and certainly their profit numbers. More to the point, Daimler indicating that. What did you make of that?
Well, Neil, you and I have been having this conversation for months now, and we've talked about the fact that once we get into a tariff tit for tat, what will happen is prices on American consumers will go up, the cost of automotive production in the United States will go up, and also will invite retaliation from our trading partners. I'm concerned that we've gotten to the place I feared we'd be.
So it is interesting that, and I never thought of it this way, that obviously Daimler, a lot of these guys, Volvo, they have U.S. operations, so they would be directly impacted if all of a sudden China goes after U.S. car makers, et cetera. But even those that don't or have as big a presence as Daimler, we're echoing similar sentiment here that just the thought of it will boomerang and produce a slowdown. What did you make of that?
Yes, I think that's right. But think about this for a second. I mean, this is an Alabama company, right, that we're talking about here. But let's step back. China is our second largest automotive trade market. In other words, after Canada, we send more U.S.-built vehicles to China than any other country on earth. So last year alone, we exported 267,000 U.S.-built finished vehicles to China. By the way, we imported about 58,000. We're enjoying an automotive trade surplus with China, and that's really what's at stake. So you've got Daimler that's exporting, and BMW, and General Motors, and Tesla, and many companies that are enjoying the opportunity to build cars and trucks here in the United States and export them to China. And so yet there are very real consequences here. I heard Senator Wyden say yesterday that chaos has consequences. Maybe this is what he was referring to.
It might seem like I'm mixing issues here, but if you'll indulge me, John, and you're usually patient with me, so I appreciate that. We're looking at Melania Trump right now at the border in McClellan, Texas. She's going to make some remarks. If you think about it, she represents the president reversing a position where he would not get involved, wait for Congress to get involved in ending this program where kids were separated from their parents at the border. Some people say the president blinked, he caved. I think these sort of things are very sort of comic book reactions to positions. But some have looked at this as a sign of if the president can move or adapt and change positions in a constructive way to move the ball forward, as in this case on the immigration issue, then there might be deemed hopeful signs on the trade front. What do you make of that?
I certainly hope so, because that's what we need. What we need is fewer barriers and lower tariffs. We need more trade and more trade agreements. And so that's the place we want to get to. We've got to engage with our European partners. In your previous discussion with Greg, you talked about the fact that the EU has a 10% car tariff. Well, we have a 2.5% car tariff and a 25% pickup truck tariff, right? So let's get to the negotiating table and resolve those things, and let's align our regulations and make sure that we can trade more and we have more opportunities for export. So I am hopeful that we can get back to that discussion, but I'm not sure that the tariff path leads us there, and I think it creates lots of collateral damage in the meantime.
John, thank you very, very much. Very good seeing you again.